We have announced to the market recently where we closed a $120 million gold forward facility with the Deutsche Bank out of London. And in addition to that facility, they also invested $40 million of equity into the company. So we were very pleased about that. It shows a high degree of confidence from a major institution that enabled us to be fully funded for the whole program. It's a large project. It's about a $45 million capital investment, and that will see the facility be able to operate in its new tailings facility for about 10 years with the ability to possibly expand that by another 10 years. So it gives the project a good long-term outlook. Once we get that up and running, and we are in December 2011, we expect to be running at a run rate of 150,000 ounces per year from then on. Once we start up production again at 150,000 ounces a year, of course our next objective is to grow that production. The market will obviously be aware we've made recent announcements that we have achieved the permitting of Starvation Canyon, which is a new underground mine. That will add initially 300 tonnes a day to our underground mining delivery schedule to the mill, growing to 600 tonnes a day at a grade of about 0.22 or slightly higher. That, of course, is good news. We will shortly be announcing that the progress on the SSX Steer complex and the commencement of mining there is complete. It's not quite complete as we go to air, but it will be complete shortly, and that will add another 1,000 tonnes a day to our production delivery to the mill, and that is also at a similar grade of 0.22 ounces per tonne. So together with the Smith mine that we've already got operating for the last year and a half, the SSX Steer, Starvation Canyon coming online in 2013 at the very latest, we believe that we will, from our own underground mines, have a production rate of in the order of 3,000 tonnes a day. We have approximately 8 mines that we're reviewing, and of course the history of those is that they shut down in the 90s when gold was $300 an ounce or less. They were uneconomic at that time, and of course the movement in the gold price in the recent times has made them more than economic. So we are now undertaking a number of things. Firstly, we are applying for re-permitting of those mines that have been on care and maintenance, and so we'll be able to operate them again. We are conducting an extensive drilling program on getting a new 43-101 report out on the surface resources that we have. The market will be aware that we've already announced a 3.25 million ounce reserve underground in our combined underground mines, and we anticipate that in the same order of magnitude, approximately 3 million ounces of additional resources and reserves will come from our open pit. So that would put us in the position of having, an approximate 6 million ounce reserve in the ground. That's pretty good for a company that is looking to expand its production. Our own underground ounces at present are supplemented by about 1,000 tonnes a day that we buy from Newmont. That is expensive ore that we buy from outside the company. And we would be planning to phase that out because, of course, as the gold price increases, our cost of buying that ore from Newmont is increasing at the same time. We plan to replace that ore with our own open pit ore, which the only cost we've got is mining the ore and hauling it down the hill to the mill. So we would expect our cost profile to go from in the order of $700 to $750 per ounce of cash cost down to in the order of $500 to $600 per ounce cash cost. And that is a vast improvement in our cost profile and, of course, means more cash in the bank and more profitability to the company. So the combination of increasing expansion in terms of tonnes through the mill the reduction of costs per ounce will augur well for the financial performance of the company going forward. And we look forward to be able to announce progressive growth in the ounces per year that we produce. And if investors go to our website and have a look at the production profile historically, this mine, when it was run by its predecessor owners before Queenstake, operated for 20 plus years at 300,000 ounces per year. We cannot see why that can't be duplicated and increased once we get the whole facility overhauled and get back to a steady state of production. So that's what we look forward to. Regarding Ketza River, that has been a cause of a little bit of confusion, I think both within the company and outside for the investors as a whole. The company itself was a little unsure of what to do with Ketza River in the first instance. We did announce to the market that we were considering spinning off a portion of it. That was principally to raise the cash so that we didn't create further cash drain on the efforts to put Zurich Canyon back on its legs. And we've now since decided that we will not sell Ketza River. We have recently announced that we've put forward and filed with the government in Yukon territory an application to recommence and reoperate that facility. That will take something in the order of 18 months to 2 years to go through the usual procedures, but we expect that to be successful. And once that is successful, we will put the facility back into production. It has an existing mill and infrastructure there. It needs a good overhaul. It's got a new camp that we've put in there this year, and all of the other infrastructure is already there. Water, power, access to the open pits. And in the main, we see a good chance of bringing that project into production. It will add about 70,000 ounces a year to our production profile, in addition to the numbers we've already quoted on Zurich Canyon. It will be at a cash cost of $400 or less, and we have enough reserves and resources there at the moment to sustain that level of production for approximately 7 or 8 years, with good potential to increase that with further exploration expenditure. Of course, we would like to do that from cash flow, so we won't be spending much more money at the moment before we get the thing into positive cash flow. So we see the combination of Zurich Canyon and the production from Ketza River as creating a good production profile for this company that will see it north of 300,000 ounces a year within about 1 to 2 years from now.